Well, good morning, everybody. Happy Tuesday. I'm glad you guys are here. Thank you for tuning in as always. I have truly just really enjoyed doing this, honestly. It's actually kind of fascinating. It's actually helped me have a better discipline in looking at news, reading through it, seeing what's going on in the real estate industry, deciphering it, and finding out opportunity in all changing markets and what that looks like for you guys. So I've actually highly enjoyed this time. I got to be honest. I think it's actually helped me to kind of even get more clarity because, like, one thing about it is when you come on here and you do something live like this, there's a little bit of element of pressure that is kind of hitting you, and you're like, I got to think through these type of things a little bit better. And I find it's mentally stimulating for me, and it's a challenge at the same time. So, but let me say this real quick before I jump into the articles today. And first and foremost is this is the last live stream I'm going to do until I get back to work in the first week of January. So I take off between Christmas and New Year's just to refresh, be with my family, and that kind of stuff. So this will be my final live stream that I do this year. So thank you guys for being here and tuning in for this. I want to make it as jump into the content as soon as I possibly can. But I am actually still tweaking things on this live stream. My obsessive compulsive behavior, I try to limit as much as that is, but there are certain things that happen that just kind of drive me a little batty sometimes. So I'm tweaking some of these things, and so if you've not subscribed, and this seems like a ask, and if you don't want to subscribe, that's fine. But I need a favor, if you will, is if you haven't subscribed, subscribe right now, and then you can unsubscribe if you don't want to be. I've got a notification thing set up that basically lets me know that someone has subscribed. That will come up on screen. I'm kind of messing around with that. So if you're watching and you want to do that, that would be excellent. Second thing is if you're watching, I'm going to ask this a little bit later. Oh, thank you, Salox90. Thank you. Oh, bam, there we go. It worked. I appreciate it, man. That worked out great. Appreciate it. Okay, that confirmed that worked. I do appreciate that greatly. Thank you. And then the next thing that actually makes me be able to answer the next question I was going to ask is the comment thing. I have it set up where I should be able to open that up. No, it's not working. I was trying to get that to show up on the screen, but I don't see that your chat is working. Hold on. Let me try this again. I don't see that out. Okay. So I'm working on a way also to bring chats up into the screen to see how that works. And I'm working through that. I'm using a software called Meld Studio. I was using OBS for some things, a little more complicated audio mix-ups and stuff. So I was just struggling with that for what I do here. So I was trying Meld. It just seems to be more user-friendly, but there's a few features in there that I'm still working through. But anyway, Salox90, thank you so much for the follow. Greatly appreciate that. And then I'm going to work on the rest of this later. All right. So not to belabor me just rambling and talking about stuff all the time, let's jump straight into kind of the conversations for today. I got a few, but I'm going to lean into something a little more specific today and not go too broad. I want to try to hone in on a kind of a circulating topic that's going on inside of Google in regards to experimenting with some syndication of listings in the actual search window of Google. We talked about this, I think it was a couple weeks ago on the stream, and we went over to just kind of like how Google is kind of experimenting with integrating MLS information inside of Google. So when you do a search for properties, it populates at the top of the search bar and kind of gives you details about the property. You can ask questions. You can, book a tour of the real estate agent, those type of things. So I'm going to do a little bit of a deep dive into that conversation to some degree today. But it's also going to be kind of framing our minds around just how significant Google really is. And what I have noticed this and in the agents that I have is we don't really spend a lot of time trying to fluff up and get our Google profile business page the way it should be to maximize exposure. And then we don't even think about it as a form of social media. In some ways, we think of it as just Google. We go there to search, but that's the point, right? It's a search company. So we should probably be putting a little more focus in on this, and especially if Google plans on doing some kind of, I'm going to very loosely real estate portal of some kind, right? So that would be that's going to be the conversation mainly today. But I am going to go through a conversation that NAR sat down and had with a local mortgage lender, and they did a quick Q&A with this lending expert to see um, kind of what their perspective is on a lot of the things going on in the mortgage side of things. And I think that'll be a good dive. And then I'm going to have a little bit of a lighthearted moment at the end because it is Christmas week, and I figure I will do a little something Christmassy. And what I've actually found was, and I'm just going to read it for you guys. It's by Yahoo Life. It's an opinion piece, and it's called "The Night Before Christmas: A Realtor's Version." So I'm just going to read that to close out the stream at the end of the day. So there you go. Now, and my brain, I'm jumping back. Sorry, is I just realized I think I know why that did not allow me to share my chat up there because that was a follow. So if somebody's watching and they would leave a comment in the chat window, that should populate my window. And I want to try to bring that up on screen if I possibly can. So, and I'll give you guys a shout out, obviously, if you do that. Just if you could drop a little chat, you just say hi, emojicon, whatever, and I can test that system out for me. But I think that's why it didn't work. All right. Let's jump straight into this conversation that that NAR had with a local lender. Okay. All right. So this is the NAR.Realtor. It's their magazine side of things. 2026 mortgage market trends to watch, a Q&A with a lending expert. Bank of America's Matt Vernon shares insights on how rates, loan products, and technology could shape the mortgage landscape in the new year. Now, here's the thing, guys. This is for real estate agents to understand. This is for buyers and sellers to understand. I really stress having a lot of knowledge inside of a lot of all these other services inside of real estate because we can get really siloed into just knowing what we need to know, and we negate being professionals in other areas. I'm not saying you have to have all the answers, but you do need to kind of develop some kind of discipline to learn how all the other industries that are associated to real estate operate. So sometimes doing a little Q&A like this and going through this is a good practice because we can see the other side's perspective in a lot of things. So let's get into this. It says, I'm going to jump straight into the questions. I'm not going to do, we can just dissect this as we go. What are the big forces you expect to shape the mortgage market in 2026? Matt Vernon says, I really think rates are going to stabilize, especially post the movements that the Fed has made this year and the predicted movements we'll see next year. By stabilize, we mean in this 6 to 7% range. My daughter, if she heard me right now, she'd be going crazy. 6, 7. That we've been in. I would not expect a dramatic drop from where we sit at the end of 2025. But as we head into 2026, I would expect a modest decline in rates, ultimately sitting in that low 6% range. I don't mean to keep laboring this, but it's very important that we do make sure that we have the correct talk track that we need to have when it comes to how the market is and what all this actually means, right? And I've said it multiple times in multiple streams. What we're looking at is the 6 being the new 4, right? The new 6% mortgage rate is the new 4% if we go back just a few years ago. So the more we can begin to educate the buyers and the sellers that this is where we're probably going to be land, it's going to do a couple things. It's going to spur the buyer to be able to move. It's going to make the seller have confidence where they feel like they're locked in to want to move and sell. So we need to make sure that we're using the data. And this has been a common theme. I mean, as I read these articles, you guys have been here. You see this. As I read these things, are they not all saying the exact same thing? So that's where we need to lean into. We need to really focus in on what everybody's saying. He says, I think housing supply is also going to be a factor which shapes affordability. Underbuilding, zoning restrictions, and homeowners sitting at 3.5% mortgages have created a bottleneck in some cases. That's what I call the lock-in effect. They feel like they're locked in because they can't sell their house and go get the same rate somewhere else. But I would expect that to ease across the country. In some places like the South and the Midwest, we're already beginning to see movement. Buyers are also continuing to shift their preparation, flexibility, and planning for the rate environment that exists. So, and that's the thing, is the longer we stay at a certain rate with just slight fluctuations, the more confidence that the market begins to develop. And that's what we're really looking for. That's what I'm hopeful for. We don't want to see these drastic rate changes, honestly. I would rather see a more balancing in the market so everything can kind of come back into equilibrium. That's what we really need to see happen. It says, so buyers will start to accept that 6% is the new norm rates. We're seeing that with our clients. Okay, so that we're going to jump that. We labored that. I think that's true. I think that's what we've seen. All right. Do you see certain mortgage products gaining traction next year? So this is the part where it's kind of interesting, right? Because in the past, what we have dealt with is mostly your FHA, VA, rural housing, and conventional type loans. Very standardized packages, very common. Most people were going the conventional FHA route, seem to be the best options for a majority of people. And those typically are the 10, 15, and 20, and most of the times 30-year type of loans. Very standardized. You have a set interest rate, they're locked in. That's what the majority of buyers have done. Now, what we're seeing though, and this is where he's going to lean into this, is a little bit of a shift going on here. And this is where I'm putting the challenge on you guys as real estate agents to get out there and really break down what these type of loan packages are that we're getting ready to talk about and how they operate. And then you got to be able to develop that talk track to explain that effectively to a buyer that's thinking about buying. You need to know their options because I've been doing this for 20 years now, and every single market has a different way of doing it. And each market has an opportunity that you can take advantage of as long as you have the knowledge on and know how to do that. So we can't just keep doing the same things we've always expected to do and expect the same results, especially as the market begins to shift, right? It's just common logic. So with that being said, we need to take some time and understand if this is where the interest rates are, this is where the income threshold is, this is where appreciation and absorption rates are, and this is the average days on the market, and you have all these metrics that you're tracking. What does that mean, and how does that correlate to being able to help a buyer to buy a home in this landscape? So that's the question, right? All right, let's get back into this. Yes, we're beginning to see borrowers choose alternatives to the 30-year traditional fixed mortgage that dominated the last 7 to 10 years in the very low rate environment, which is why that's why it dominates. When you have a low rate, it makes sense, right? I can go do a conventional loan, 20% down, or FHA. I'm getting a low rate. I don't need all these just different variables or different loan programs that are out there. If you go back 2 decades, which is when I got in, clients were also looking at different programs because affordability was more of a challenge then, like it is today. Consumers are starting to investigate adjustable rate mortgages. Okay, up to 10% of our current volume is in adjustable rate mortgages. That's the highest level since 2023. Buyers will continue to consider these alongside traditional fixed rate mortgages because they offer lower payments early on and the potential to refinance later. So I know I'm preaching to the choir, but an ARM is just that, an adjustable rate mortgage. So in other words, you're buying this home with a rate that's a certain rate, and it's going to adjust over the period of the loan. The interesting thing is most of these loans, and this is kind of a thing that you want to make sure you clarify with lenders that you're recommending, that there's no penalty to refinance or refinance early or pay off early. There's no penalty for doing so. And therefore, the ARM could be a viable option for some people that are kind of on the fence. They know their income's going to be increasing. Therefore, they also trust that the market's going to have appreciation. So they can take the risk and go ahead and lock into an ARM type loan and then know that as their income follows up, they would be able to refinance later at a better rate if the rates do go down. So that's the logic behind that. It does give the ability to lock in a lower rate and be able to pay potentially a lower mortgage payment. So that's a good option. And then also a 15-year mortgage is also attractive for the right buyer. Borrowers with substantial cash flow and savings are looking for lower rates. And the lowest rate on a fixed mortgage is usually a 15-year versus a 30-year. That does come with a higher payment, so cash flow is important. All right. So, and I will say this, that 15-year mortgage is definitely going to need to be somebody that is cash heavy. Obviously you're getting a half of the type of loan in years than the 30. So your payment's going to be considerably more. But here's a scenario for where that could make sense. And this could help having the conversation with a seller that's kind of on the fence, is helping them understand that they've been in their home. They bought it at, let's say 3, 4, 5 years ago. Let's say they bought it 5 years ago, right? The beginning of the pandemic and all that kind of stuff. And then they had this huge amount of inflation take place. The market has not dropped. Their price and their value has not dropped on their house. Maybe there's a little bit of a fluctuation between, a couple years ago to now. But if you were to go back and look 5 years ago at your buyers that bought, and you go and you talk to them and you say, look, I understand you feel like you might be locked in. Has your life circumstances changed? Is there something that maybe you would like to downsize? Or is there another situation where it makes sense for you to sell, but you're scared to do that because you feel like you're locked into that mortgage because you have such a low rate? right? And that's the typical mindset. Remember, people aren't thinking the way you think as a real estate agent. They're thinking as a consumer that just goes through life and they know their lane. You know your lane. So if you know your lane, you could understand the math here on a 15-year mortgage versus a home that has appreciated and is scaled up in value in the past 5 years. So think about what I'm getting ready to say here, right? I think you know where I'm going. I'm going to the point that those people that bought 5 years ago are sitting on a pile of equity. They could technically sell that house, make a profit, and if they're wanting to downsize, especially, roll that money over into a 15-year loan, pay off the loan quicker, and then be able to have a big chunk of down payment on that house, right? So yeah, sure, the interest rate might be a little higher, but look at the debt to income ratio. It changes drastically in that scenario, right? So you need to be able to do the math. You need to be able to sit down with home sellers and sellers and talk to them and break down what this looks like. So this is all good advice from him. Hey, again, if you're watching here, throw in a thumbs up, a hello, or something like that in the chat for me. I'm trying to test out a system. So if you guys could do that for me, that'd be excellent. We keep hearing about the affordability struggles of first-time home buyers, which assistance programs or alternative loan products could help open up the market for them in 2026. All right, so the affordability struggles. So that's definitely there's a wage gap going on here. There are a number of programs that, frankly, many clients and prospective homeowners don't know about. That's why it's incredibly important to get educated on the mortgage process. Also, do your research online for how to connect with local government or municipalities to apply for grants and down payment assistance. There is a lot of little programs out there that I would encourage you to go out and talk to lenders you've worked with and talk to them about offers that they have. Like, what are some of the things that they offer as in regards to grant money? And figure out who does and who doesn't, because there is a lot of programs out there. Sometimes there's local banks in your area that have different programs than the national banks have. So I would do your research as an agent. Take it upon yourself to do a little bit of investigating with the lenders you recommend and see what they have to offer in regards to this. Now, it doesn't mean just because they don't offer a grant that they're not a good lender. It's just maybe there's just a better opportunity somewhere else, right? And then talk to a lending professional, because large banks, small banks, regional banks all have programs. Yep. As an example, and he gives an example of a Bank of America, they have a few grant programs here. He said, we have a down payment grant program that will pay 3% of the purchase price up to $10,000. We have a home ownership grant program where we will give $7,500 towards closing costs to permanently buy down the interest rate or cover one-time costs. And then we have a 3% down payment mortgages that you can utilize. So just there, they have $17,500. And I will say this, there are a lot of banks that are really wanting to get your business. So they have programs like this that they're relying upon to try to draw you in. And that buy down rate, that is a factor. They roll that kind of stuff in with the numbers and they buy down the rate for you, so you have a lower interest rate. Sometimes that math works and sometimes it doesn't. That's another thing that I would say, get educated on. Learn how the math works on the mortgage side of the industry, right? So you can help navigate this for your buyers. All right, then this topic here, and this has been a big one. I covered this a while ago, and it's still being talked about and everything. So let's talk about a 50-year mortgage. And this is the question that they asked. And what about a 50-year mortgages? Is that being considered by the industry? And here is his response. It's not necessarily a new idea. A 40-year mortgage has been a product the industry has looked at over the last 2 decades from time to time. The appeal of a 50-year would be lower monthly payments, which could help with the affordability challenge, right? When you amortize that out, obviously you're taking that debt and you're going out 50 years versus 30. So it's going to bring that payment down. Sometimes it's significant, sometimes it's not. It depends on the amount of home that you're buying. So maybe it makes sense. I'm not going to say it doesn't make sense. I have a whole video that you guys can check out. I don't know how that works, but I'll drop a card up there in the window there. You can go check that out if you want to. But that is kind of, there's benefits and there's pros and cons to everything like this. And so I have a whole video on this where I kind of dissect this a little bit more. I won't labor it too much, but there are significant potential downsides that need to be considered. Total interest costs would be much, much higher, right? If you take that over the life of the loan, the interest you're going to be paying is a whole lot higher than it would be in 30 years. So you're going to be paying a lot more for that house if you were to stay in it for 30 years, right? Or 50 years. Equity would build very slowly and borrowers would remain in debt for decades. That's very true. You're talking about half a century, guys, half a century you will have a loan. That's a long, long time, and you're not paying much towards equity. So there's a lot of risk there, right? It would require a regulatory change, and it could come with significant trade-offs that buyers would need to carefully consider. And just out the gate, guys, you can't even do it right now. It's not even a product you can do. It's not being offered. It requires a lot of regulation to even be offered right now. All right. Do you anticipate a surge in refinances in 2026? He says, as rates declined in late 2025, we saw a pickup in refinances, mostly from borrowers with higher rate loans from the past 2.5 years. That will continue to some extent, but most lender portfolios have rates that are at 5% or less. So a substantial move with rates could be needed for a big refinance boom. So maybe, right? So we'll see. We'll see what happens there. With the rise of freelance and gig work, are lenders becoming more flexible when evaluating self-employed mortgage applicants? This has been a big topic because majority of real estate agents that are watching now, majority of you guys are 1099 contracted laborers, right? So you're not employed. You run your own business, basically. You have your own set of books. So you are self-employed. So when you are self-employed, it can be very difficult to get qualified for a loan because you're writing everything off. And to be quite frank, you're trying to make yourself look as poor as you possibly can to pay as little in taxes as you possibly can because running a business is expensive. So that's the goal. So a lot of times, when you're trying to do this type of stuff, if you're thinking about buying, you end up structuring your taxes very differently going into getting ready to buy than you would if you were not going to buy, right? So you're playing that game a little bit. So this is a great question for us to consider. Kevin, good to see you, my friend. Thank you for joining in this morning. And a matter of fact, I appreciate that. I'm pausing for just a second here because I want to test something out. I can highlight it. Check this out, guys. Boom, it worked. Kevin, thank you so much for giving me a comment, buddy. I needed that. I was testing out this system today. I needed somebody to give me a chat. Thank you, guys. Thank you, Kevin. Appreciate that greatly. All right, so let's get back into the content. So what was his response to this, right? He says, we do a lot of business with self-employed borrowers. They often have variable income, so we may ask for larger down payments or more documentation to assess income stability. Access is improving, and creativity in evaluating these borrowers will continue. Working with a knowledgeable lender is key. So there's a lot of talk about this. I think what I'm gonna do is I'm gonna dive into this a little bit more. I'm gonna learn. That's exactly what I'm gonna do. I'm gonna make a note right now. I am going to dissect and learn how to do what is the best process for gig workers and individual contracted laborers to get financing, like how they should structure this. I think this would be a good conversation to have with like a CPA, and then also bring in a lender, almost like a round table. I think that would be a great deep dive into this conversation. I'm gonna do that. I'm gonna work on that for next year. All right, next one is, how will technology influence the mortgage process? It says AI and technology are bringing efficiency and effectiveness to the mortgage process that ultimately will simplify the steps for borrowers. It's being used more behind the scenes and helping us to find documents and information without having to ask a borrower to provide what would be a traditional paper statement. So what's going to happen here, and this goes the same way on our side of the industry, it doesn't replace us as people. What it does do, it does help us streamline a lot of the logistical type work that we do behind the scenes. To be honest, that's where I'm leaning into AI the most. It's that logistical things that is a lot of time suck that helps me be able to be more efficient in the way that I do things. So that's the same thing I would say in regards to the mortgage industry and across all industries. That's what we see. All right, last thing they say here, I think, this is the last question. For someone planning to buy in 2026, what advice do you have for how they can prepare? So this is a very important thing for us to understand because we want more buyers, right? So here's his response. Preparation is key in any mortgage market, but especially the one that we're in today. Prospective home buyers should start preparing early. Education is important. It's also incredibly important to prioritize your credit health and reduce debt. A strong credit score and a low debt to income ratio improves not only your ability to qualify for a mortgage, but also can provide benefits from a rate perspective. So really, it's going to get down to talking and instructing your buyers on how to begin to structure their finances to be able to buy a home. What does that look like? What is their debt to income ratio? What does their income, look like in regards to current situation? What does it look like in the future? Do they have a chance of increasing that income? Do they have bad credit? Do they need help fixing that bad credit? Do they need advice, right? Being their advocate and getting involved with them now. Remember, we probably need to be switching our mindset to playing the long-term game more than the short-term game with buyers. I think we need to help people get off the fence. All right, so let me talk about this in summary, right? So if after reading through this and thinking through the mortgage market and some of these trends and this Q&A with this lending expert, you know, I would say this, that even though the lending experts are predicting that rates may remain in the 6% range, the reality is the focus will shift from that rate shopping to loan product innovation. So eventually what'll happen is people are going to stop not worrying so much about what the rate is, because it's going to become more of a common thread across most mortgage industries where everybody's kind of offering the same kind of interest rate. It's going to lean more heavily into like what kind of loan product that these banks offer. Like, what is that innovation that they're bringing to the table to win the buyer that ultimately helps them buy a house? So, you know, I would pay attention to the rate, but what I'm going to say is shop the product. You know, start talking to lenders and figuring out what products they offer. Do they have grants set up? Do they have local grants? Like, what does that look like? And then I would dive deep into the math of how that actually works for the affordability of your buyers. Because that's going to be the main hurdle for them, right? That affordability part. Like, they need help to close. They need help with closing costs. They need these type of things. So I would absolutely start learning everything I can about what buy downs, how they work, how they correlate to the finances. What is an adjustable rate mortgage? How does that look? What banks in your area are offering those and what those rates look like for those that want to do the ARM type loans? You know, and what kind of down payment assistance programs that are out there and what should we expect in 2026? And what I would also encourage you to do is focus more on payment, not so much the price. Now, I'm not saying you negate the price because that's the ultimate debt, right? But the reality is most people need to understand what that monthly outgo is. We want to be conscious of how much the price is of the home that helps that person get a home and not feel too much in debt. But at the same time, we're really more concerned about the cash flow, which is what lenders are looking at. They're going to look at that debt to income ratio per month and figure out these people can afford the house. So helping them understand, like, what is your payment going to be? So getting really good at the net proceeds sheets to walk buyers and sellers through what that looks like, get good at those numbers, right? So I would say shift your marketing message to focus more on that kind of conversations, right? All right. Then the next thing I would say is helping those that are not really ready to buy, those that are struggling to figure out their debt to income ratio, maybe have bad credit, walking them through. Maybe think through renters. Like, is there renters out there that just don't know? They don't know they could actually afford a house. Do they need help walking them through that? So I would massively encourage potential buyers to start, you know, looking at what they need to do to fix their credit, how they begin to make, you know, start saving money. And the reality is it could take 6 to 12 months for this to actually come about, right? So if you can help buyers structure that, lenders are going to be more, you know, more willing to loan them money. So lean into that very heavily. So there you go. Okay, now let's jump into this conversation. It's funny. I shared this last week and maybe even a little bit the week before, where Google was supposedly going to be kind of going to war in the real estate portal industry, which, in other words, putting listings in actually a search database. And that has been the whole entire topic point of what this is happening. It's kind of went through the whole industry. Right now, they're just experimenting. They don't really know what that's actually going to look like and if it's even going to happen. But, you know, there was a moment when this announced that Zillow's stocks took a little bit of a hit. Of course, real estate agents are like, woohoo, because there's a love-hate relationship with Zillow versus our MLS portals, right? So a little bit of this battle going on, a little bit of tension. So when this happened, Zillow's stocks did go down a little bit, and that created a more surgence and excitement for, hey, Google's entering the search portal wars for real estate. And, you know, the reality is we don't know that yet. We do know that they did experiment with that. You can go back and watch my previous live stream and learn more about that. But let me get into this article here. And this is going to be like, Inman's going to love me because I've got 3 articles straight from Inman. And I think it's, again, I'm not an affiliate of Inman. I really like their content, the way they write. I say this every time, but I do. I think they're very balanced. They bring sources in. They are very careful not just to have headlines that create clickbait. They just kind of deliver the message. So Inman, if you're watching, I appreciate the way you write. I really do. Don't change. Keep your headlines very, very simple. All right. So this title here is How Google Could Become Real Estate's Next Big Gatekeeper. All right. So, in this week's download, how will you shift your marketing if Google becomes the next dominant player in the online listings landscape? I've already set the stage, but let's be honest. Like, this is a good question. What if they did? Like, I want you just to pause and think through that. What if Google did decide to syndicate MLS listings directly inside of google.com? Okay. In other words, I go to Google and I type in, I need a 3-bed, 2-bath house in, Iowa. All right. You can name a city. And I type that in and I hit the search button. And right at the very beginning, kind of like when you do a search for a hotel, and it syndicates all those properties across the bottom of that search result immediately. No one's websites. No, no, no. Actual data has square feet, bedrooms, and everything, right? So this is what they experimented with. Inside of each one of those cards, you could click and learn more, or you could request a tour, and it would go directly to the real estate agent. So what if they did do that? So think through that. What would that be? And let me know in the comments. What do you think would happen if Google went full in to being a portal for MLS listings, right? What do you think would happen? Let me know in the comments. All right. So let's jump into this. The one thing you can always count on in the real estate business is that you can't count on much of anything. That may also include the way you get your listings seen online. If the currently all-powerful real estate portals end up facing their own version of the Death Star, Google. If all you have and all of your lead sources are in one lead source, all right, if you put everything into Zillow and your entire 90% of your business comes from Zillow or any other lead portal out there, right? If your entire business comes from that, do you realize that you are one change, one algorithm, one business maneuver, one regulation, name anything, away from losing your entire business? Now think about that. If you put all that you do inside of just generating leads that way, that business could ultimately change the way you make money, right? Not a good way to build a company, right? It's very, very risky. So anyway, needed to say that. All right, the analysts. Portals like Zillow face long-term risk from Google real estate experiment. A Google ad pilot in several key markets shook up the real estate industry recently when analytics firm House Canary's home search site, Come Home, so that's the connection of this experiment. Those are the two companies, I mentioned this a while ago, began to allow buyers to scroll through listings, then schedule a home tour with a top-rated agent chosen by Google. Okay, interesting keyword. This is where we're going to dissect this just a little bit, is an agent chosen by Google. All right. And we're going to come back to that. Mike Del Prete first reported on the ads on his blog, saying that there are a lot of potential implications for real estate portals, especially in light of the controversy around private listings and the ongoing development of artificial intelligence. Subsequently, Wave Group managing partner Victor Lund questioned the partnership between House Canary and Google, saying that it violates IDX guidelines and rules that prevent brokers from advertising other brokers' listings without prior express consent. What happens next remains to be seen. And here's the thing, that's just a quick summary of what happened, right? Google tested this experiment. They had these House Canary and Come Home. They tested this thing. It went directly to the agent that they recommended. And then another person's opinion, and then the headlines went crazy. But another person's opinion was, hey, this is probably in violation of a lot of these IDX agreements inside of the MLSs. And Google's probably going to respond and say, no, we had permission and we had the legals look at this, but whatever. That's not really the debate, right? Lawsuits happen all the time between these big companies. That's not really a concern of theirs, to be honest. They're testing out the stuff. They'll take the consequences until they figure it out and they'll implement. So, but we need to perk up a little bit and pay attention. All right, so let's jump into this now. This is where the conversation begins. If Google's real estate experiment is successful, it could create a fundamental shift in how real estate pros do business. All right, so we're speculating. Fortunately, Emmons contributors are already thinking ahead to how such a shift might impact the industry, what you can begin doing with Google right now to be more successful next year, and how digital transformation is already happening as a result of the current thirst for real estate M&A. So this is the series of articles here dissecting this, and it's going to help us to be able to think through this. So I want to be diligent in bringing this to you guys so you guys can begin to make the adjustments in your business if they decided to do this. Now, the cool thing about this is, let's just say it doesn't happen at all. Doesn't really matter, right? Because what we're going to learn here is that Google is a big search engine. They index everything on the web, and I mean everything. Your testimonials, your phone number, your email, your properties, they know it all. So what this is to me is a massive wake-up call to real estate agents to say, you've not been doing enough with your profile with Google. And that's what we really need to focus on. So we're going to get into that. All right. It says Google just entered real estate, but the real shift isn't about listings. The next era of real estate won't be won by whoever displays homes best, Mullen McKinley writes. It will be won by whoever understands buyer intent most deeply. What is the intent of the buyer? And then the next article was Don't Sleep on Google, 7 steps to get more 2026 recommendations. Google remains the place consumers verify credibility, research agents, and confirm trust before making contact for the first time. Jimmy Burgess, I mentioned him multiple times, great trainer. 70% of digital transformations fail. The other 30% will redefine us. I will not be going into that article, but I am going to go into these other 2, all right? Because this is where I want us to think and begin to be preparing. And if at the end, even if they don't do this, we're going to have some really good SEO and Google profiles set up by having this conversation. So let's jump straight in. Well, let me just summarize just real quick, kind of this this whole thought process here. So we need to be very diligent in paying attention to what is going on. So if Google is testing these features and they're going to allow users to search for homes inside of their portal, and then also contact agents directly from these search results, which is going to be bypassing traditional portals like Zillow and even Realtor.com. We need to be able to get in here and begin to prioritize what we look like online. All right. We need to prioritize our local entity. What do we look like on our Google business profile pages? What is our keywords that we use? What are the neighborhoods that we mention, right? And then we need to be able to go through here and look at ourselves. Google your name, match everything up, make sure everything is on brand point, all right? So leading into this conversation to the next article, I want us to frame our minds around that is we need to be able to go on there and do what I call a brand audit. I tell my agents all this all the time. Go online, Google your name, look and make sure that what's being syndicated out there is all the same information and not confusing, right? All right, so now, let's jump into this very first article here. It says Google just entered real estate, but the real shift isn't about listings. The next era of real estate won't be won by whoever displays homes best. Molly McKinley writes, it will be won by whoever understands buyer intent most deeply. All right, we talked about last week. The gap visualization never closed. The industry has spent the past decade solving visualization. So in other words, what the buyer sees, right? Stimulating the buyer into action through Matterport scans, 3D tours, the virtual staging. That became very standardized, to be honest, like almost across the board. If you need to have professional photos, professional videos, 3D Matterport, if you want to move property because your competitors are doing that. Like that is the game, guys. Like that. It's just like if you were in the YouTube world or in the marketing world, you understand that capturing someone's attention is the hardest thing to do. And you have about 2 seconds to do so. And good visuals are going to do that. So that has become the norm. So now it's shifting though. And now democratized spatial capture through devices like MetaQuest 3, which lets users create photorealistic digital replicas of real spaces in minutes. So now we got this virtual reality world that's kind of exploding. And that's kind of like the new wave. I've not dived into that yet. I just actually read an article about this not too long ago. There's not enough on it just yet, but it's kind of on the verge. So it's worth mentioning. The technology is genuinely impressive. Luxury developers can showcase unbuilt properties. Agents can offer immersive experiences to international buyers. Renters can tour dozens of units without leaving their couch. But here's what visualization never solved: understanding what buyers actually think while they're looking. This is the key, okay? How do you know what people are thinking? We know how they respond when you put something visual in front of them, right? We can track eyes, we can figure out clicks, we can see heat maps and figure out what they're doing online. But how do you get into here? How do you know what they're thinking, right? So a prospect who spends 12 minutes examining kitchen layouts, repeatedly measures the primary bedroom and asks about HOA fees is fundamentally different from someone who clicks through in 90 seconds. Both register as tour views in traditional analytics. Only one is ready for a serious conversation. This is the silent buyer problem, and it's about to become the central challenge of 2026, okay? From visualization to intention. So this is where it gets very interesting. We really got to put our thinking caps on about what this actually means, okay? The shift mirrors what happened in e-commerce 2 decades ago. Amazon didn't win by showing products better than catalogs. It won by understanding how shoppers moved through digital spaces and what they lingered on, compared, abandoned, and returned to. So behavioral data became more valuable than the images themselves. All right. So when we start talking and we start really thinking through Google, where is Google? They're everywhere. I want you to stop and think about where you use Google. You search for things. You're probably watching YouTube right now, which is owned by Google. You're going on Maps. You have Google Maps. Guess what? There is metadata on everything you do. You have Androids. You have phones that download apps. It's tracking everything you do. So there is this major amount of data inside of what you do. So when you start trying to figure out how to predict what people will do and what they're thinking, it's in the data. Kind of creepy in a way, but this is where we are, right? So this is where we're now moving into the real estate arena. And we've got to begin to think, like, how do we as real estate agents take advantage of this amount of data? Like, where do we leverage this data, right? And this is why it's like really important for us to pay attention to what Google's doing, because if they are going to enter into the real estate arena, it's very crucial that we're ready for it. All right, so real estate is approaching a similar inflection point. As photorealistic tours become ambiguous, the competitive advantage shifts from who has the best visualization to who understands what buyers do inside those visualizations, the data. How do they operate with that visualizations? Google's entry accelerates this. It already possesses unprecedented data about search behavior, location patterns, and consumer intent across virtually every single category. Okay? If it layers home discovery onto that foundation, it's not just displaying listings, but potentially understanding buyer motivation at a scale no portal has achieved. Excuse me. Think about this. It's not as simple as just Google saying, look, I'm going to share listings out there so people can click and get information just like Zillow. It can monitor the behavior. So when that person goes to Google and they search for a home, it might already know what they've done across the internet and what kind of kitchens they like, what kind of bathrooms they prefer, what kind of locations they look like, and what kind of lifestyle they are looking for. That is data that Zillow and Realtor.com has never had access to, not like Google has. So this isn't just like putting listings up there and that's the end of it. It's just, oh, wait, another way to access properties. Oh, no. Way deeper than that. But what else does Google know? They know you, the real estate agent. They know what you do. They know how you show your properties. They know how you market your properties. They know how you take pictures. They know everything about you. They know about your posts you make across social media accounts. They know. So when it comes to them, going back to what I said earlier, them suggesting an agent based on Google. So when someone types in those search results and they are looking for a home, guess what it's pulling? Google profiles and things about you. So if you're not engaged with Google and you're not interacting with Google on these platforms and having the correct behavior, then another agent could be suggested to be for the tour to go to. Now, isn't this a fascinating thing to think about? Kind of creepy, but worth this conversation, right? All right. Google's success isn't the point. The shift toward buyer intelligence as the differentiator is already underway. What intelligence actually looks like. I mean, this is a fascinating article, guys. Your brain can go into so many different directions with this, right? And we can get very hyper speculative about what this could mean. But we've got to be careful because it could create fear in us and also the consumer in some ways that we're getting spied on, this kind of stuff. It's already out there, but there is opportunity here, and we just got to shift and navigate this, right? All right, spatial intelligence. The category emerges to address this gap. layers behavioral analytics onto whatever visualization infrastructure already exists. Rather than replacing Tor technology, it makes existing investments more valuable. So this is where I'm saying, like, the era is gone where you take your own photos, you do your own tours. You have got to have a professional do it. They're going to put the best foot forward because it's going to track how you market properties and what you do in response to that. And it's going to track the buyer activity on your properties. So if you're not putting the best foot forward in your marketing efforts and it's not getting the highest click through, Google's not necessarily going to want to recommend certain things, right? And it goes to your profiles, it goes to everything, your headshots, your marketing materials, all of that, right? So we've got to be very good at this. Companies like Charlotte-based Path Intelligence, which recently received a $50,000 North Carolina Idea Seed grant and serves clients including the Ritz-Carlton residences in Boston and the Interes project in Barcelona, exemplify this platform agnostic approach. Its AI agent, called Bella, answers property questions around the clock in 22 natural languages while capturing which features prospects explore, which questions they ask, and how long they engage with different spaces. So that's a lot of data that those places are getting. The buyer behavior they observe reveals the intelligence gap in action. Prospects aren't asking about square footage because that's in the listing. They're asking about HOA fees. They're asking whether cabinets and floors can be changed. They're asking about distance to coffee shops, gyms, and public transit. These are the questions that they're asking because they don't need answers to the things that they can already find online. They're looking for more of those like search terms, right? These are decision stage questions. Someone calculating real cost is serious. Someone asking about modifications is mentally moving in. Someone mapping their daily commute is projecting their actual life into the space. That's buyer intent. And no tour completion metric captures it. This is the mind of the buyer. We're now entering the mind of the buyer, right? This is information that helps us see how they're thinking and how they're interacting with that and what questions they have. Very, very fascinating. For agents navigating commission pressure and seller skepticism, this shift offers something valuable: proof of work. The conversion changes from we had 47 virtual tour views this week to we had 47 views, 12 engaged substantively, 3 focused heavily on outdoor spaces and asked about landscaping maintenance, and 5 compared bedroom dimensions against their other properties they're considering. Now, if you had that kind of information on every single one of your buyers, think about how much of a service you could render them. So leaning into this type of AI stuff, we really need to be paying attention, guys, because I will say the agents that are really paying attention and implementing certain of these aspects into their models, they're setting themselves up for the next 5 to 10 years of success. They really are. Now, it can be overwhelming, right? And we got to do micro steps here. You don't go all one day, just all of a sudden implement every single thing that we're talking about. It's a slow implementation of this AI into your real estate business. Slow implementation. So don't get overwhelmed, just one thing at a time. But we need to be paying attention and researching this and giving a little bit of thought and time to this. All right. When a seller questions why their home hasn't sold, an agent with behavioral data, this is fascinating, can show that most prospects abandon tours at the kitchen, which could suggest a staging or pricing issue. Oh, this is mind-blowing. Like, you can track what is going on with the data. You can see what the behavior of the buyer is on the actual listing descriptions and photos. This is where AI is heading. It's monitoring everything that they do. So if they're sliding through photos and all of a sudden they get to the kitchen, that's where a majority of people are bailing, then something in that kitchen triggered them and the majority of people don't like it. That is a conversation to have with your seller. Do you see how that could lead you into that conversation with the seller to say, hey, look, we have a problem here. We're losing most of the buyers at the kitchen picture. There's something in the kitchen they're not liking. So we need to change the paint. We need to update something, cabinets, something, counters. We got to do something, bathrooms, those type of things. We need to figure something out, right? If they don't get past the outside of the property, right? They don't move beyond and enter into the house. That's data. That's behavioral data. All right. That just fascinating information. This is technology at its finest and probably borderline the scariest, to be honest. International buyers engage heavily. Okay, this transforms defensive conversations about commission into collaborative strategy sessions. The agent becomes a data-informed consultant rather than someone who defending activity through generic metrics. In other words, we're not sitting here going, Yeah, we only have X amount of buyers coming through here. No, we're going straight into the data and telling them exactly what's going on. Exactly what's going on. What 2026 demands. All right. The convergence is unmistakable. Visualization technology continues to advance. Google is experimenting with intent based home discovery. AI tools are reshaping how consumers research major purchases, and the industry is under pressure to demonstrate value at every stage of the transaction, right? For agents and brokerages, this means investing in intelligence infrastructure that works regardless of which virtual tour product you leverage. For developers, it means treating virtual tours not as marketing collateral, but as intelligence gathering assets that inform sales strategy throughout the project lifecycle. I can see in the near future me doing a lot of videos on how to leverage this kind of data. If you've been tuning in at all, you see how I just love the data because the data doesn't lie. The data tells us the truth. I can always look back and speculate on the views of properties we get online and what that looks like. But when you start looking at data that tracks behaviors of a buyer and seller, that is a gold mine of information for you to begin to articulate scripts and handle objections with that goes way beyond speculative reasoning, right? It goes way, way deeper than that. So this is fascinating to me. Fascinating to me. All right. So just some quick little action items to take through this. And I mentioned it before, but let's go through this again. So if we want to win in 2026, and there's a lot we just talked about, and we know that a lot of this stuff is not really in our marketplaces right now. Some of you guys might be having that. If you are, let me know in the comments. That'd be great to hear that. Let's have this conversation. If you guys are doing some of these things we just talked about, would love to see how this is working. But at the same time, let's just say right now, we're not there yet overall. But we see a shift kind of beginning to happen with this AI. It's already ramped up rapidly. So what we need to be able to do in 2026, we got to move way beyond just the basic, profiles and activities that we do online. And we need to move into managing our Google ecosystem to stay on the top of those recommendations, right? So if that means we got to start doing short form video and doing things like this, maybe we need to lean into that. Get over your fear of doing so. If you need to go onto Google profiles and update that, you need to do so. So again, you need to go online, audit your digital footprint, look for consistency across the board, ensure your name, address, phone numbers are identical across everything, your website, make sure your Google business profile and social media all match the exact same thing, because this is going to help the search ranking because it's going to be consistent across the board. So when Google begins to push people up to the top based on their Google profile and it's indexing everything else, it all matches. So that way they know that they got the right person. So that's SEO in regards to all these different platforms, right? Then what I would say is zone in, and I say this all the time, hyper local, hyper local. Do not think broad, think local. So you need to figure out like a review strategy. Make sure that you ask your clients to mention specific neighborhoods or property types in the reviews. You need to be adding those in doing reviews of neighborhoods, coffee shops, all those type of things, and adding it to your Google profile under your Google reviews. When you're going out to eat somewhere, open up Google and your business profile and review that place and provide helpful information and insert things about the neighborhood and real estate and that kind of stuff inside of your review. Because then again, they're going to be searching all these type of things and bringing that up to the surface because you're going to be an agent that's active in your community. And so I would almost create a checklist, to be honest, where you check your Google business profile every single week. I would treat it like a social media feed. I would post photos to it. I would add new listings to it. I would put local events that you got going on to it. I would add market updates to show Google your profile is active. I think if you can show Google that you're active, I think ultimately it's going to help you in the search results, right? Google wants to bring relevant information to the person as quickly as possible. So they're going to be indexing all of these things. So that if I'm going to say make a move right now, we can speculate on where all this technology is going and AI. We can do that all day long. But the reality is we have something right in front of us that we're not maximizing. And that's working on our Google SEO and getting the habit of putting this into play. I think it's a missed opportunity for a lot of people. So when I read news like this, to me, that's where the opportunity is currently, is optimizing our Google profile. That's where I'm leaning in right now. All right. Real quick, we're going to go through one more section here in regards to this Google thing and also just kind of where it's going. Actually, I think I actually touched on most of these things right now. But I'm just going to go through. This is again, Burgess here. Jimmy Burgess goes through this. And he gives 7 steps to get recommended by Google. Step 1, treat your Google business profile as your top free lead source. I mean, we don't think about Google as being a lead source, but that's what it is, right? If there's one asset most agents underutilize, it is their Google business profile. I just went on and on about that. Local searches, that's where people begin, right? They go to Google and they search this in. If you gave a review of that, it should pop to the top, right? And it'll be also on like restaurant search pages for reviews, that kind of stuff. So all those things are linking back and forth to everything. Start with the basics, but do not treat them as something you set once and forget. Your bio should not read like a resume. It should read like a searchable entity. That means including the term realtor or real estate agent, the city and areas you serve, key neighborhoods you want to rank for, and a clear specialty if you have one. That specialty could be luxury, waterfront, relocation, first time buyers, or another niche. You also want to include proof points that build credibility. So fluff this up. Step 2, win the recency game with photos and activity. Google favors businesses that appear active and relevant. If you have not done this before, start by adding at least 30 photos to your Google business profile. Photos build trust quickly, and Google notices them. Include a professional headshot, lifestyle images, team photos if applicable, neighborhood and community shots, local businesses, events, and listing related photos. Fluff it up. Treat it as a social media page, right? If you're going to post something on social media that's relative, you should probably consider putting it on Google, right? Step 3, build review momentum with purpose. Reviews remain one of the strongest trust signals Google uses. It does not only look at how many reviews you have, it looks at how often reviews are coming in and what they say. A consistent goal of 1 to 2 reviews per month is far more powerful than a single large review pushed once a year. So, great. Number 4, publish short local content Google can find. So get on there. 400, 600 words is ideal. Validate neighborhoods, talk about neighborhoods, that kind of stuff. Step 5, strengthen authority across trusted platforms. Google wants to see what other reputable sites say about you, not just what you say about yourself. That includes platforms such as Zillow, Realtor.com, Yelp, LinkedIn, Facebook, Instagram, your brokerage site, and local association directories. Look through all those type of things. Look for consistency. It's critical. Step 6, get mentioned by local authority sources. So again, try to serve more in your community, be involved, get on local news and radio and get your name out there, magazines, newspapers, if you still have one. So this is all adding to that SEO, right? It goes back into, these are all good practices to do, even if you're not trying to fluff up your Google profile page, right? And number 7, eliminate inconsistencies that create confusion. This final step is basic, but it is where many agents unintentionally hurt their visibility. Make sure your name is the same everywhere. Avoid variations across platforms. Yeah, there you go. Very good, guys. I hope you found some value in this. If you did, give me a like, comment, smash that subscribe button, all that kind of stuff. I do appreciate you guys for being here greatly. And now we come to the end. I do thank you. I hope you got some value. I do want a conversation in the comments in regards to all this, but we have come now to the end. And this is the last end. This is the end of my live streaming until the new year. Like always, I thank you guys for being here, but just as a lighthearted thing, I found an article that I'm just going to go through, and I'm just going to read it. And it was The Night Before Christmas, a realtor's version. So I thought this would be kind of fun to end. It is the holiday season, and I thought this was kind of cute. So I definitely want to give a shout out to the person that wrote this. I guess this is the guy, Gary Sandler. Gary Sandler, Real Estate Connection, Las Cruz Sun News. Let's see. I don't know who actually wrote this. Does it say? Maybe. This are originally. Gary Sandler is a full-time realtor and president of Gary Sandler Inc. Realtors in Las Cruz. He loves to answer questions that can be reached at. Oh wow, he gave us his number and email. That is great. All right, so this is him. He wrote this poem, or this Night Before Christmas, a realtor's version. Editor's note: Gary is off this week. We think he's trying to close on a house for Santa and Miss Claus, but he won't confirm or deny those ultimate snowbirds will be coming south for good. Gary did leave this in our stocking for your holiday reading. It's a realtor's take on 'Twas the Night Before Christmas, written by Cindy and Brian Cook. Okay, there's the people that wrote it. Cindy and Brian Cook, realtors in Edmond, Oklahoma, and posted here with their permission. So Cindy and Brian Cook, if you ever stumble across this, which I doubt you will, thank you for giving us this and sharing this. So I definitely want to give you a big shout out. It says, "'Twas the night before Christmas, and all through the open house, not a buyer was stirring, not even a mouse. The Cincy was burning the home stage with care in hopes of St. Sell It would soon be there. The realtors were busy making the beds while visions of dollar signs danced in their heads. Their broker was sitting at the office and making a map, had just settled that buyers don't fall in your lap. When out on the lawn there rose such a clatter, I sprang from the comfy couch to see what was the matter. Away to the window I flew like a flash, tore open the shutters and hoped for a buyer with cash. The for sale sign glittered in the new fallen snow, giving my hopes of a buyer a bit of glow. When what to my wondering eyes should appear but a minivan full of buyers, a sale could be near. With a little old driver so lively and quick, I knew in a moment the house was their top pick. More rapid than eagles, the buyers they came, and they whistled and shouted their comments the same. Now buy it, let's sell it, now get an offer and put it in contract. Get all of the signatures and send it right back. To the top of the porch, to the top of the wall. The house inspector has looked at it all. The closing date has been set, and we're just waiting on the bank. The interest rates have been rising, but now they have sank. We have the closing docs. It's ready to close. Got the closing gift, a gift card from Lowe's. The buyers and sellers have arrived at the title place. The VIP room is ready. It's been a crazy race. The licenses have been copied and doc ink is still fresh. Now it's moving time. So hopefully everyone has gotten some rest. I've gotten my check and my clients have a smile. Hopefully they will send me a referral in a very short while. But as I said at closing and drove out of sight, Merry Christmas to all, and to all a good night. Just That's great. Thank you for that. Again, big shout out, Gary Sandler with Yahoo Life. Thank you for this opinion piece. And ultimately, I do want to give the final shout out to the people that wrote this, Cindy and Brian Cook, realtors in Edmond, Oklahoma. Thank you for that writing. That was very cute and very cool. Guys, thank you for being here. I appreciate you guys. Enjoy this time off with your family. Enjoy Christmas. Have a wonderful, happy new year. And we'll be back at the start of the new year with another live stream. You'll probably see some videos up there. I'll post a few videos, and I am on TikTok. So feel free to follow me over there. If you're on TikTok, join me over there. I'm posting some helpful tidbits of information as we go through this into this year. So thank you as always. Appreciate you guys greatly. Thank you. Have a great Christmas and a happy new year.